Almost every country in the world is drowning in debt. The United States has reached the highest debt level in its history, $38 trillion. The European Union currently owes $14 trillion, and Japan's debt stands at around $9 trillion. Even oil-rich nations like Saudi Arabia or export giants like Germany and China are buried under unbelievable amounts of debt. But within this situation lies a fascinating paradox. If everyone is in debt, who exactly do we owe? And here's where money, power, and history collide. Nothing is as simple as it seems. Debt isn't just a burden. It's the invisible architecture of our modern world. Behind every war, every crisis, every economic collapse or financial boom, there's an unseen scaffolding of debt. And if you pull that chain of creditors far enough, you reach a shocking truth. The world doesn't owe money to anyone in particular. It owes it to itself. But that doesn't mean everyone benefits equally. Today, humanity lives under $315 trillion in total debt, nearly 3 times the size of the global economy. So how did we get here? To understand that, we need to go back to the very beginning, centuries ago. The idea of national debt wasn't born on Wall Street or in modern banking. It was born on the battlefield. It was 1694. England was at war with France and running out of gold. The king turned to merchants for help. In return for a steady stream of interest payments guaranteed by future taxes, those merchants financed the crown. And to manage this new arrangement, the Bank of England was created. That moment changed everything. The state could now spend money it didn't yet have. In return, investors received something priceless, a promise from the government. A promise that could be bought and sold. And that was how the world's first government bond was born. The foundation of modern finance was laid right there. France copied it. The Netherlands improved it. And the United States used the same system to fund its revolution and expand westward. Debt was no longer a mark of failure. It became a symbol of credibility. A nation that could borrow was a nation that could govern. Empires once conquered lands to mine gold. Now, they issued bonds to collect interest. The battlefield had turned into a balance sheet. Fast forward 3 centuries, and debt has become the world's biggest export. The U.S. owes $38 trillion, Japan $9 trillion. And global borrowing increases by roughly $1 trillion every 100 days. Every country borrows, every bank lends. And every citizen, through taxes, savings, and pensions, is both a debtor and a creditor. But who's holding the other end of this chain? To find out, let's look again at the United States. America's debt isn't just national, it's global. Out of that $38 trillion, about half is publicly held, meaning it's owed to investors rather than to other parts of the government. Roughly 2/3 of those investors are Americans. Banks, pension funds, insurance companies, mutual funds, and the Federal Reserve. The remaining 1/3, around $9 trillion, is held by foreign investors. The largest holder is Japan, about $1 trillion. Followed by China, around $800 billion, then the UK, Luxembourg, and Belgium. So when people say America owes China, it's true, but only for about 2% of the total. In reality, America owes most of its debt to itself. The Treasury issues bonds. Banks and funds buy them. The Federal Reserve sometimes buys them back, releasing new dollars into circulation. Americans pay taxes that fund the interest on those bonds, and that interest flows right back into American retirement accounts. It's a massive, self-sustaining mirror system. The debt is real, But the creditor is just a reflection of the same system. And it's not just America, it's the entire world. Japan lends to the U.S. through treasuries. The U.S. lends to Europe through the IMF. Europe lends to developing nations through the World Bank. And those nations, in turn, lend back by parking their foreign reserves in Western bonds. It's like a global game of hot potato, except the potato is made of promises. Every country holds someone else's IOU. Every promise is backed by another promise. It's like a poker table where every player has borrowed chips from the next, and the only rule keeping the game alive is that nobody stands up. But that's not the end of it. There's a fourth layer, the markets themselves. Behind every government bond sits a network of institutions managing tens of trillions of dollars. Hedge funds, pension funds, sovereign wealth funds, and central banks. They decide who borrows cheaply and who pays a premium just to survive. When their confidence fades, currencies crash, governments fall, and economies collapse overnight. Democracy decides who governs, but markets decide who survives. And the most powerful actors in this system, the modern high priests, are the central banks. They don't just manage debt, they manufacture it. Every time the Fed or the European Central Bank buys government bonds, it creates new money in exchange. One balance sheet's liability becomes another's asset. Every dollar in existence represents a unit of debt somewhere else. There is no such thing as debt-free money. Every coin, every bill, every digital dollar carries an invisible engraving. I owe you. For decades, this cycle has kept going, powered by trust. As long as investors believe governments will keep paying interest, even if they never repay the principal, the machine keeps turning. But what happens when that trust breaks? We've seen it before. In Greece, 2010, the government's debt became unpayable. Bondholders panicked, yields soared, and the European Central Bank and IMF stepped in. But their rescue came with austerity, higher taxes, spending cuts, and mass unemployment. For an entire generation, bailout came to mean sacrifice. In Argentina, repeated defaults turned debt into a national curse. In Sri Lanka, when the country ran out of foreign reserves, it faced fuel shortages, protests, and political collapse. When the system breaks, the creditors suddenly have faces. The IMF, the rating agencies, the anonymous bondholders who hold entire nations by the throat. And yet, even after collapse, the same logic resumes. Old debts are restructured. New loans replace the old ones. The machine resets, with different names on the same balance sheet. Because in the 21st century, debt isn't designed to be repaid, it's designed to be rolled over. Governments don't plan to pay off their debt. Not now, not ever. That's not a secret, it's policy. When we take out a loan, we're expected to pay back the principal. But for governments, things don't quite work that way. They don't really pay off their debts, they roll them over. They issue new bonds to pay off the old ones. Economists call this refinancing. And at some point, interest itself becomes a tangible product, the price of stability. Today's global economy runs on that spiral of interest. Just like a shark that must keep swimming to stay alive. The U.S. will never truly pay off its debt. It will keep renewing it forever. Japan has been doing the same for decades. Its debt now exceeds 250% of its GDP. Yet interest rates remain near zero. Investors aren't waiting to be repaid. They're waiting for the next rollover. Why? Because government bonds are the world's safest collateral. A U.S. Treasury isn't seen as a debt, it's treated like an asset. It's one of the pillars holding up global finance. Pension funds hold it, banks use it as collateral, and central banks count it as money itself. It represents an endless cycle. The system is built on the idea that governments don't pay off their debts, because if they actually did, the global economy would seize up. Think about it. If Washington suddenly cleared all its debt, banks and funds would lose their safest haven overnight. The dollar supply would shrink, deflation would hit, and the economy would freeze. So the solution isn't to end the debt. It's to keep the cycle going. That's why governments constantly create new debt. Not randomly, but within a structured system. Debt is the heartbeat of capitalism. With every pension payment, every mortgage, every market trade, that heart keeps beating. When politicians talk about balancing the budget or eliminating the debt, they're selling a dream. The real goal isn't to erase debt. It's to make sure it stays manageable, payable, credible, and endless. Because once confidence disappears, numbers mean nothing. Interest rates skyrocket, and the economy grinds to a halt. Here's the illusion behind the debt system. The goal isn't to repay it. It's to keep the world believing that repayment will always happen. It's a closed loop of trust. And as long as that trust remains, the numbers can grow forever without breaking anything. But trust isn't shared equally. When we say we owe the debt to ourselves, that's only partly true. Interest payments don't flow evenly through society. They move upward, from taxpayers and workers, to the institutions and investors holding the debt. So debt isn't just a flow between countries. It's a transfer between classes. That's why global inequality and global indebtedness rise together. The system rewards those who hold debt and punishes those who repay it. Sound familiar? It should, because it's always the same story. From households to governments, from nations to the entire world, the pattern never changes. Creditors aren't villains. Debtors aren't innocent victims. They're just two sides of the same machine. But the real question is this: what happens when the system runs out of new borrowers? When new debts can't cover old promises? That's when "who do we owe?" stops being an abstract question and becomes a personal one. Because at the top of this global system, there's no single villain to blame. Not China, not Wall Street, not the IMF. All of them, and we, keep the wheel turning together. Modern finance has turned debt into money. It made the intangible tangible. Governments issue it, banks multiply it, investors trade it, and we live by it. The line between debtor and creditor has vanished. Once, debt meant servitude. Today it means balance. But when that balance breaks, when trust collapses, the illusion fades, and we remember, in full force, what debt truly means. A promise that can't be kept forever. If this gave you a new way to look at things, stay with us, subscribe, because history always knows the answers, and the answers are always hidden within history itself.